all of these inflated indices and prices in other areas. Why can't we have $100 silver? It should be. Why can't we have $5,000 gold? Does that mean the world will come to an end when that happens? No. But what it does mean is that the dollar that we value everything against is losing value. I mean, maybe we come to a place where the Fed is able to lower rates, stimulate the economy, get everything cranking again, and the stock market takes off. But in terms of ounces of gold, it will lose ground. I really do believe that there is no way out of an ultimate dollar devaluation. And that you even see President Trump and his administration talking about that was what they would do. And now you got Vance saying not only would he like to devalue the dollar, but questioning the wisdom of being the world reserve currency.
Investors looking beyond red-hot equities could consider buying silver, which could outperform various asset classes over the next 12 to 15 months. Wealth advisors, however, recommend buying the metal only on dips or making staggered purchases after the recent price run-up. AndySchectman is the CEO of Miles Franklin, with a strong background in the financial industry. Based on fundamentals, AndySchectman observes a global trend toward prioritizing physical commodities over fiat currencies. He highlights India's substantial silver imports and the recent agreement with the UAE, emphasizing that countries are increasingly draining Western exchanges to accumulate physical assets. India's imports of gold and silver from the UAE had jumped 210% in 2023 and 2024 to $10.7 billion. Total silver imports stood at $5.4 billion. Schectman notes that India cut gold and silver import taxes from 15% to 6% to reduce black market activity and make these metals more affordable. Highlighting a fundamental economic reality, Schectman states ongoing price suppression by major banks, particularly due to the metal's use in the military-industrial complex, but believes that global accumulation by countries like India and China will eventually shift market dynamics. J.P. Morgan Chase's involvement in the silver market has long been contentious. Over the past decade, the bank has admitted to 5 felonies and paid over $1 billion in fines for various offenses, including a $920 million fine for manipulating the precious metals markets. Despite the bank's public denials, suspicions persist that J.P. Morgan is manipulating silver prices. Meanwhile, Schectman asserts that sophisticated financial players like central banks and sovereign wealth funds are amassing precious metals. Consequently, despite current price suppression, gold and silver will retain their purchasing power and become crucial financial assets as the world moves away from the US dollar. Now, we present the clips of AndySchectman's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
It's very frustrating. It's very difficult. I think the first thing that people need to understand is that the laws of economics and of Mother Nature will prevail. The suppression of these markets always end poorly, and this is no exception. The world is changing. The world is moving to one that puts more priority in physical commodities in their own possession than they do the currencies that purchase them. And that's what these countries are using against us. When you see India import nearly 700 million ounces of silver in the last few years from the West, and now because they have a treaty with the United Arab Emirates that allowed them to buy over $1 billion worth of silver this last year, because of the reduction in import duties just with the United Arab Emirates. Well, now we find out that they just cut import taxes totally down to 6% from 15% to stop the black market importing of gold and silver. You have one of the biggest silver purchasers in the world where it just got a whole lot less expensive for them to buy it. And these are the countries that are draining the exchanges. My mentor, Richard Russell, God rest his soul, always used to say it's the number of ounces that matter. And you try and say those things, but most people would take it as gaslighting or, talking the book or whatever it may be, but it is true. I know that the majority of human population understands that currencies inherently are meant to die, especially those that are fiat. Ultimately, they always die. They return to their intrinsic value of worthlessness, of zero, of paper. And the slow accumulation by these sophisticated commercial central banks, sovereign wealth funds, they understand the long game. Unfortunately, there are a lot of people who don't have the time frame to play the long game, And as frustrating as it is, you have to understand you're not buying it to become wealthy overnight. You're buying it because it is wealth. And ultimately, Mother Nature wins. You cannot suppress and continue to manipulate a market that is enticing massive global demand. It will end badly, and it's as if I think instant gratification has become so ingrained in the American psyche that it's too difficult to deal with. I don't ever lament when the price goes down or when the price goes up. I'm not overly joyful. I just understand that over time, gold and silver will do what it's done for all of time, and that is to retain its purchasing power. But in particular, at the end of this macro system that we are in, it will go from 0 to 100 very quickly in terms of its speed. And what seemed like an eternity in being, stuck in a quagmire of confusion and disconnect from reality. Like, why would it not be going higher in this environment? You have to understand you have 8 commercial banks with a tremendous amount of power that are suppressing silver to the degree of the largest concentrated short position in the history of the COMEX. Why? I have my own beliefs. I really do believe it has to do with the amount of silver used in the military industrial complex, that these are very powerful players that don't want to let the price of silver get away, but the rest of the world doesn't care what they want. And when you see India and China doing what they are doing, using the suppression of price to accumulate and continue to drain and to do it methodically, it will reach a point where the realization of being on the wrong side of this trade is a death sentence. And I do believe that. And I think they understand that already. Maybe guys like Elon Musk already understand that. Maybe they're the ones, or he's one of the ones that have been standing for delivery here in the West. I don't know, but what I will say is you just have to put your time horizons on hold and know that over an extended period of time, gold and silver will probably end up being the 2 most important assets, financial assets, that we can own in this country as the dollar starts to really globally lose favor. And I think that's going to happen in an accelerated fashion at some point. What starts out as a trickle can very quickly turn into a flood. And I know it's frustrating. I do. I get it. I'm frustrated even having to talk about it all the time. But, it is what it is.
During the interview, AndySchectman mentioned that major banks likely struggle with silver deliveries, as seen with dwindling stockpiles and their activities at the Shanghai Metals Exchange. He predicts that sovereign nations like China and India will continue to drive demand for precious metals, leading to significant price increases. Republican presidential candidate Donald Trump's potential victory is only part of the strong bull case for gold heading into 2025, while lower silver prices are helping attract renewed interest from ETF investors, even as Indian demand falters, according to precious metals analysts at Heraeus. Despite limited public influence, Schectman noted that those holding gold and silver will benefit as the US dollar weakens. Let's return to the interview.
We know that gold cannot be exported out of China, but silver can. Why would they be there? We see that that's around the time that not only did the price of silver go down, but so did the stockpiles of silver at the Shanghai Metals Exchange. And have they been trying to get out of these short positions? I don't know. Are they trapped? I don't know. But it would seem as though that's what they were doing. They were going there saying, listen, we need help. We don't have the physical delivery to meet our redemption demands of delivery. Now, at some point, they have to get their house in order. There's all of these stories that have smoke emanating from them where we assume fire lies within or beneath, and maybe it does. One of these days, it's going to break. What will break it? And, Jim Sinclair always said it, and it never really made sense to me, stand for delivery, stand for delivery. He used to tell people to take delivery of COMEX bars, gold bars off of COMEX. There was a financial advisor in Minnesota who would call me and he said, look, I got hundreds of clients with 100-ounce gold bars. Can I switch them to gold eagles? Because I took them off because Jim Sinclair said I should. But in the end, Jim will be right. I mean, this is how you win. And I don't think it's the public that has the power to do that, but the sovereign nations do. And maybe the public does. You look at what gold has done for a moment, and it's here again, sniffing its all-time highs, while at the same time, the ETF numbers have dropped. Positive real return with interest rates and a strong dollar should be the death knell for gold. Zero participation, 0.5%, right? That's what Rick always says. And it hasn't. I mean, the price keeps going higher. What does that tell you? It tells me that the demand is real, but what happens when the American public wakes up? And wakes up to very few alternatives. You got the Magnificent Seven turning down right now. You got the yield curve uninverting. Is that going to be a recession, just like every other uninverted yield curve has predicted? What, since 1950? I don't know. But I will say that there will come a time when people who have seen through all of this smoke and mirrors and have hung on to the metals for the right reasons will witness it. And you know, I used to think to myself, by the way, because these central banks understand that taking delivery is how you win the game. Can't do it too fast. You got to continue to play this game so they can get as much as they can at subsidized prices. But I just think that that day is coming, and you can't buy gold and silver with the intentions of getting wealthy. And then I started thinking about that. I mean, why can't we have $100 silver and $5,000 gold? We have what, $70,000 Bitcoin? Why not? Why can't we? You know, a Dow Jones off the hook. I mean, why can't we, with all of these inflated indices and prices in other areas? Why can't we have $100 silver? It should be. Why can't we have $5,000 gold? Does that mean the world will come to an end when that happens? No. But what it does mean is that the dollar that we value everything against is losing value. I mean, maybe we come to a place where the Fed is able to lower rates, stimulate the economy, get everything cranking again, and the stock market takes off. But in terms of ounces of gold, it will lose ground. I really do believe that there is no way out of an ultimate dollar devaluation, and that you even see President Trump and his administration talking about that was what they would do. And now you got Vance saying not only would he like to devalue the dollar, but questioning the wisdom of being the world reserve currency. It sounds a little bit like Jared Bernstein. So I don't know. I just think ultimately the dollar is in trouble. And if you understand that and hold on long enough and don't have these notions of becoming wealthy tomorrow.
Despite ongoing market manipulation and price suppression by major banks, the trend suggests that precious metals will likely strengthen as the dollar's dominance wanes. The silver price forecast is revised upward, anticipating silver to average $30 in 2024. A higher price of silver could drive investment in silver-backed ETFs. A supply deficit due to the continued decline in silver mine production could support the silver price. What are your thoughts on the potential impact of rising demand for precious metals on their prices in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.